All right. It's 11. We might as well start. My name is Lo Liebenberg. I'm the CEO of PayProp North America, and for those of you who aren't PayProp clients, I'll tell you a bit about who we are in a minute. I'm not here to sell you PayProp, but I'm here to just say that's who I am. And I'll tell you a little bit about myself, because what gives me the right to tell you about money and how to manage money. And then we'll talk a bit about the topic at hand, which is safety in numbers. You know, how do we keep our landlords safe? How do we keep ourselves safe when we start dealing with other people's money? It shouldn't take very long. This is 15, 20 minutes. And at the end, ask any questions that you have. I look forward to engaging with you, and hopefully you can disagree with me, because yeah, that'll always be great. So I need to always put, I mean, I'm down in Florida at the moment, and being in the US, it's quite a litigious society. So I need to put down the disclaimer that basically says, you know, I'm not a lawyer. I'm not providing with legal advice. We're just taking decades of experience and giving our view on it. And if you really want to get advice, go ask a lawyer, because that's what they do for a living and that's what they pay to do. So there you go, disclaimer done. Just wanted to talk a little bit about who we are. So PayProp has been around for a while. We've been around since 2004, although we've got a headquarter in the United Kingdom. We're in the US, in the UK, in Canada, and South Africa. And we process, it's actually now closer to $1.5 billion US per annum in residential rentals. And we do it for some of the largest real estate companies in the world, literally. But our scale of client goes from anyone that does 1 to 3 to 4 to 5 properties to clients that do 5,000, 6,000, 7,000 properties. So everything in between. And our clients are property managers that manage residential real estate for landlords. And everywhere that we go, we have this unique thing that we do that is integrate with banks. So whereas you would have had exposure to traditional property management software out there that allows you to do billing and stuff like that, what makes PayProp really unique is that we integrate into the banking rails of the countries that we operate in, so that we don't just tell you what you want to pay or who you should pay. We actually facilitate the payment for you and get the payment result back, because we embed ourselves into the banking system. In Canada, we use CIBC, a local Canadian bank, and that allows us to do a whole host of interesting transactional things that we can talk about on another day. Just a little bit about where we come from. So we always say this, because we've got probably, I mean, I've worked in a few companies in my life and I've been with PayProp for a decade now, but we've got the most interesting backstory in that we didn't start as a property management platform. We actually started as a platform that allows charitable donations to happen across the world. So founded by 2 brothers that said, look, it's better to give than to receive. And what Give and Gain does, and once this webinar is done, I really encourage you to go to Give and Gain and to play around on the site, because it really is our heart and our soul as a business. It is a platform where normal people like you and I can raise funds for good causes. And what Give and Gain literally does, it curates the causes. So we make sure that they're really Section 21 or nonprofit companies, so that you're not donating to some random guy who isn't registered to receive donations. So we make sure that the money goes to the right places. We do it in a transparent way, and we do it via a web platform that you can see that every penny or dollar that you donate goes to the right place. Lovely initiative, but that is our heart and soul. That is the technology that PayProp is built on. So we started as this foundation that enables people to give globally, and we do it in hundreds of countries across the world with thousands and thousands of causes, and you can see some of the causes that we associate with. All in all, everything that I've showed you, from the type of banks that we integrate with, to the type of clients that we deal with on the real estate side, to the type of charities that we deal with on the philanthropic side. We're a global payment specialist company that happens to specialize in one of these 2 verticals, charities and properties. And that's where we're coming from today, is to say, well, we move money for thousands of property managers every day. And what have we learned about the value of treating the money wisely? Before I do that, a little bit about me, and I feel bit exposed doing this, but we thought we'd include the slide so that you understand that I'm not just, I've done this before. So I've worked as the CEO for PayProp in South Africa for a long time. PayProp actually registers in South Africa as a property broker. So we were the largest property broker in the country. And we did a whole bunch of interesting stuff that just, I'm saying all of this so that when you look at me, you're like, well, who is this guy? That you at least have some background that we've done this, and we've done this for a long time. I'm a registered broker in the state of Florida. I'm a registered broker in South Africa. And So we've got some exposure to the property market, and we know what's going on. So we've got operations in Miami, where I am today, and then we've got operations in Toronto, in Ontario. And I think most of the people on this call are from Canada. So Canada is very different to Florida in the way that rental funds are managed. So let's start there. Just as a little bit of background, in Florida, it's very regulated. You need to have a trust account, you need to audit it, you need to reconcile it, and all those things need to happen for you in order to be able to manage rentals. Where in Ontario, it's not the case. In Ontario, you can be a property manager and there's no trust account requirement, there's no reconciliation requirement, there's no licensing requirement. You can run a rental portfolio. And so this session is not about breaking the law or not breaking the law. This is about what's good common sense practice when I deal with landlords. And I've literally only broken it down into 4 sections, which I said this is going to take 15, 20 minutes, and then I've said what I needed to say. When we all deal with landlords in our businesses every day, and they pay the bills, and where do they fit into our business? And then talking a little bit about managing tenant payments, and then why it's important to be able to isolate certain types of funds. Why is it important to be able to isolate income returns, and how that ultimately keeps landlords happy? And the last point is really what we do, because everyone who has a property management agreement with the landlord knows that is where the money comes from. Because it's as simple as this. In the business that you're in, people are very tenant focused because tenants scream louder than landlords often, the pipe burst, the maintenance, whatever is going on. So the temptation is sometimes to point towards the thing that screams the loudest, and it's tenants. But no one gets into residential rentals because they love tenants. And in fact, I think you'd be fairly deranged if that's why you do it for the love of tenants. We do this because this is a business, and the person that pays the bill in this business is the landlord. So more landlords, more money, right? Losing landlords means losing money. So that is the obsession of good property managers. How do I keep landlords happy? Tenants come and go, but landlords need to stay because they pay my bills every month. And that's the approach that we took. That's the lens through which we looked at everything. And very often when we think about keeping landlords happy, the last thing that we think about is money. We go, it's good service, it's flowers, it's chocolates, it's birthdays, it's getting agreements up. But the way that I manage a landlord's money shows the landlord to what extent I care about their business. So what do landlords want? It almost reminds me like that movie in the late 80s. What do women want? What do landlords want? The answer is actually quite simple. A landlord just wants a risk-free return for you. He wants the lowest possible risk-free return on the asset that he's allowing you to manage on his behalf. So you're really taking the role of an asset manager. Someone gives you a really expensive asset, a couple of $100,000, and he says, make me money with this thing. But make sure that while you're making me money on this asset, that the risks of diminished returns are as low as possible. And once you as a property manager and your team start taking in that mindset, a lot changes in the business, because a lot of administrative staff in businesses look at their roles as administrative. I need to take this piece of paper and move it to there, and take that piece of paper and do that. But once you start inculcating a view in your team that says, well, you're asset managers and that's your primary responsibility. A landlord gives you a couple of $100,000 worth of assets and says, make me more money. Then that also changes how you service landlords and how you treat landlords and how you deal with landlords. So what is this thing about a risk-free return? Because there exists nothing in the market as a pure risk-free return. There's always risk when it comes to return. And it really consists of being able to make sure that the income attached to that asset materializes in full and on time, right? So when it doesn't materialize in full and on time, what goes wrong? Well, obviously, we all know non-payment of rent. In the middle of COVID, that was a big issue. So when there's non-payment of rent, what happens is the owner is not getting the return on his asset. He's not getting the income that he should be getting on that asset. He could have put the money in a pension fund and he could have gotten the return, but he's trusted you with his asset to generate him money. So if the tenant doesn't pay, the landlord doesn't get a return. But there's another part that's often overlooked, which is the dilution of income. So we all know that there are expenses attached to a property. Where it sometimes goes wrong is that the owner doesn't get everything that he should get. So I should have gotten $100, but I only get $95 because of some leakage or inefficiency in the system that I use. So I'm not getting my full due. I'm getting a due, but not the full due. So what is the promise that as asset managers to landlords we need to make? And it's one of those Irish blessings. May your tenants always pay on time, and may you receive all that's due to you. And if you can do those two things for a landlord, you've got a happy landlord. It might be a maintenance issue here and a maintenance issue there, a tenant screaming, but your landlord, if he receives his full payment on time and he always receives what's due to him, you have a happy landlord, which means more landlords, more money. So I'm going to delve into those last two things and say, well, how do I make sure that my landlord gets his money on time, in full? And how do I make sure that he gets the portion that is due to him? So getting tenants to pay on time has really just only got two portions to it. It's selection and action. So getting the right tenant through the door, so making sure that I don't select bad tenants. And I'm not going to talk about credit bureaus or credit scores. You all know the history there. The only piece of advice that I've got there is use a selection mechanism. Don't just look at a tenant's shoes and watch and say, it looks like you can pay the rent. You've got a responsibility towards your owner to vet the tenant that comes through the door. But that is self-evident, and I'm not going to talk about that today. But I do think it needs to be explicitly stated in your agency that says, what are my selection criteria? Because if the selection criteria is just, well, look if the tenant can pay, not so good. The selection criteria is we run X credit score and we don't allow tenants with a score below Y. There's a policy for you that you can follow. But to be explicit about what you allow through the door, I think is a smart move. But then when we get to action, there's two rules that we've learned, sort of informal rules that we've learned over the years of doing this, is what you allow in terms of late payment becomes the norm, and the speed with which you can follow up and knowing who to chase changes the result. And let me explain it to you a little bit better. Every day that your tenant doesn't pay, your landlord is unhappy, and you all know that, because that landlord maybe has a bond payment that goes off against that property or other expenses that need to be paid. So you're really severely restricting that landlord's cash flow. But there's another important component to this, is that every day that you wait to chase a tenant, so if I go back to that slide, knowing who to chase rapidly, every day I wait to chase a tenant, I'm giving that tenant permission to do it again. So if I allow someone to not pay by the 1st, but by the 3rd or the 5th, next month, the tenant's going to pay by the 3rd or the 5th. So it's about the predictability that I create with landlords, but more importantly, the predictability that I create with tenants that says, this is the behavior in this agency. There's a rule. You pay by the 1st, by the 2nd, I fine you, by the 3rd, I follow up, whatever your rule is. But the only way that you can do it is if you've got your access to real-time live data to know who actually owes me money, because it doesn't help that I follow up with all my tenants because I don't know who's paid or not paid. So excuse the 2-second PayProp commercial on here. I've just taken you a screenshot that shows how we help people manage non-payment of tenants. Because PayProp integrates with a bank environment, we actually push the results of positive transactions back into the platform. So what you're looking at as a tenant is a live, as a property manager, is a live tenant balance. This is the tenant's balance as of 15 minutes ago. That this is what this person owes me right now. So this person owes me, and this is all just demo data, don't worry. I mean, a lot of our staff on here. This is someone that has an invoice of $3,000, owes me $30,000, and that was the last invoice, the last payment, the last reminder. And we get to give you rapid insights. Every 15 minutes, you actually know who owes, who doesn't owe, without having to log in and out of your bank. And then what are you going to do about it? So being able to very quickly say, email and text this person a reminder that they need to pay. So excuse the little PayProp font there, but we find that the first and easiest part to ensure that the landlord gets their due is to be aware of who owes and to then act quickly. And the longer you wait, the more predictable that becomes to tenants and the harder it becomes to landlords. So the first just small little takeout is arrears are things that need to be dealt with quickly, and they need to be dealt with real-time information. So whatever platforms or systems that you use, it's important not like wait until the 7th or the 9th or the 5th or the whatever day you pick in the month. But if the money is due on the 1st, chase it on the 1st and chase it with live, accurate data. So that's the first piece of advice that we have. Again, a lot of common sense because you guys in property management, you've seen this, you know, and sometimes you just need someone to repeat it. But this is the part that I want to talk about today is may you receive that's all that's due to you. So I want to preface this by saying this is not about theft or fraud. This is not about you stealing a landlord's funds or someone in your team stealing landlord funds. This is about them not receiving their fair due to some administrative issue or laxness or problem on the accounting or on the banking side, because that's the only two places where that goes wrong. I've either accounted for what the owner should get in an incorrect way, or I've incorrectly paid too small amount to the owner. And most instances of this are accidental in nature. So, oh, I accidentally forgot that I paid a supplier with someone else's money, or we'll talk about the actual examples. But the long-term consequences of a landlord turning around to you and saying, I want a full reconciliation of all payments on my property, and not being able to provide that, you know you're going to lose that landlord. When it becomes tax season and a landlord says, I want to see everything that's happened on my property, and the numbers don't add up. And he says, but wait a minute, I should have received more. That's not a conversation that you want to have with the landlord, because that's a landlord that you end up losing. So we want to help you avoid those situations where when a landlord asks for a recon and says, what happened on my property? And what you've paid does not match his expectation or what he thought should be due. How do I avoid that in the long term? And being proactive here is the key. So I want to use an analogy of the current practice that a lot of the clients that come on board to PayProp have. And that's buckets, right? So what happens in a lot of accounts, and especially in Canada, people have one account in which they put all their funds. In fact, not just rental funds. Sometimes they put business funds in there, repair funds, maintenance funds. It's a whole bunch of money that goes into one bucket. And the bucket fills up and there's $100,000 to disperse. In a state like Florida, that's completely illegal. You're not allowed to put any other funds except rental funds in a registered and insured trust account. But in Toronto, a lot of the clients that we take on board have this one account into which they throw a lot of funds. And then what they do is they just scoop out of this. So I just, take a scoop and I scoop water out and I pay. I just pay and I pay and I pay, and I hope that more money comes in than goes out. And the problem here is that as long as there's money at the bottom of the bucket, and that I can keep on taking out money and paying out and paying out and paying out, people very rarely interrogate what should have been happening in this account. Because if everything works and no one is screaming, I've got no incentive to examine what I'm doing. But the question you should ask is, well, when I make that payment, so I've got like 20 payments today, I've made these 20 payments. Whose money did I use? Because remember, when a landlord signs a management agreement with you, he signs an agreement with you as if he is the only client that you have. He says, you are responsible for collecting my rent, looking after my property, paying expenses on my behalf, and paying me what's due to me. As the landlord, I don't care that you've got 99 other clients. It is as if I only have this one property in my portfolio as a property manager, and I need to look after that property. So think about money coming in. There's $100 coming in. I only have $100 to pay out. If I pay out $120, whose $20 did I use? The only mathematical reality of that is if I've accidentally paid more than I've received on that specific property, I used another landlord's money. So if I received 100 in rent, I just throw it all in the bucket, and there's a maintenance company that's screaming, and I've already paid $100 to the owner, and I want to pay out the extra $20. I am taking money from another owner and paying this individual property's expense. So that's where this scooping money out analogy starts making sense. So I'm going, I don't know when I scoop water out of a bucket who the water belongs to anymore. More importantly, what happens if there's an NSF? So there's a non-sufficient funds payment. So someone paid me with a check or via pre-authorized debit, and I have gone and made payments on the assumption that that money is cleared. So I think I got $100 in, I've paid $100 out, but then the payment fails. The money is gone, it's no longer in the bucket. But now I've used $100 of other people's money. So I have shorted a whole bunch of other landlords because I can't allocate the leak. So just as when I scoop money out of the bucket, I can't allocate whose money's in the drop. I also can't allocate whose money is leaking out of the bucket because I don't know whose money it is. I've not segregated this money to say, every landlord has a bucket, which is actually the solution. Why is this important? It might sound extremely academic that says, well, no, this guy's crazy. He's talking about buckets and leaks and drops and allocation of money. I've got this bucket, all the money goes in, all the money goes out. No one complains. There's a little bit left at the end of every month. It's not really an issue for me. The thing is, the moment you receive third-party funds, the moment you take money that belongs to the landlord, you're assuming a fiduciary duty. You're saying, I promise to look after your asset and I promise to make sure it works as well as possible. I'm responsible for this thing. And part of that promise to an owner is that I'm not going to use your money to pay another owner's expenses. I mean, if you were upfront about an owner about that, he says, okay, so how we manage this agency, we put all the money in a pool and then we just pay out as we need to. And then, you know, there might be days that I use your money to pay Dave's expenses, but, you know, on other days, Dave will make you whole again. If you tell that to a landlord as he walks through the door, he's going to turn around and walk away and say, I don't feel like you look after my asset. So just in the way that we promise the owner, I'm going to look after your asset and make sure that your return is yours, we need to make good on that duty throughout this client's journey with us. Because if I start using your property's money to pay other properties' expenses, I'm diluting your return and I'm not making good on my promise to be a good asset manager for you. So now it sounds theoretical, but here's some practical examples that we see every day when we take on new clients. So paying yourself a commission before the check clears. So $100 comes in, I'm owed $10, I'm going to take my $10 and run, and I'm going to start paying my phone bills with it. But until the check's not cleared, that money really isn't available. Until the pre-authorized debit hasn't cleared, the money's not really available. I know it's a practice that we see with a lot of people that we take on board is to just pay business expenses from that same account. The issue is if something goes wrong, whose money disappeared? Whose loss is this? We strongly advocate that at the very, very, very minimum, to have an account that is separate from your business account, into which all funds that belong to landlords are paid into, to not mix it with your business expenses. That from that account, you take your commission, put it in your business account, and run your business. Landlord funds and business funds should never mix. You should put landlord funds in a separate place, account for it separately, and your business fund separately. Purely because you want to keep the owner's return pure. Another thing that we see a lot of is paying the supplier who shouts the loudest. So you would have, I mean, the example that I used earlier, you've got $100 that has come in. I've already paid the $100 over to the owner, but the guy that's cut the verges is screaming really, really loud. There's money in this trust account or on this account. I'm just going to pay him, and I'll remember that I've overpaid and I'll correct it last time. And you know what happens with remember and post-it notes? You don't. And again, that loss is then gently distributed across all your other owners, because at the end of it all, you don't know whose money is left. And that is the rule of thumb. When you look at your bank balance in that account at the end of the month, and you say there's $3,000 left at the end of the account, if you can't accurately determine whose money that leftover funds are, you have a problem, because then you can't really account for who you paid. So that to me is always a rule of thumb, is if you can't allocate the remainder, it means that somewhere in the middle you've made a mistake. So what's the solution? What we see some people do, firstly, what we love, is that they open a separate account. So they've got the separate bucket that says, hey, I'm going to put all my landlord funds in this bucket. That's really smart. I want to keep it from my business account. And if that is the only behavior change you have after today, that's really cool by me. If the only thing you take out of today is like, look, it's really not smart to have my business funds and my personal funds mixed with landlord funds, because I want to keep the landlord's return pure and separate, and I want to make sure that I can account to landlords for funds that are theirs. Hey, great, lovely. First major step taken. But the ultimate solution is really to have a separate account for every landlord, because that's the only way you can really ensure that, you know, money coming into the first bucket is allocated to a landlord, and then money going out of that bucket only can relate to income for that individual landlord. And that's how you try to keep it pure. That is really hard to do. But we've seen people do this. We've seen people go to a place that they say, you know what, I am going to have a separate bucket for every landlord. And that's the only way that I'm ever going to make sure that I'm not using bucket A's money that's come into it to pay bucket C's expenses. Because I really, really, really want to be pure when I tell my landlords, I am going to look after you. I'm going to make sure that you are perfectly compensated for everything that is due to you. But that's a lot of buckets to manage. That's really a lot of buckets to manage. So how do we do it? And this is my last little PayProp punt in all of it, is PayProp is very different in the sense that we don't use buckets, we use pipes. What PayProp does is consider it as a funnel. So PayProp is a bank integrated environment that allows people to pay. So they all your tenant money does come into the same receptacle. But the way that we allocate and tag money means that money goes into a separated pipe, and it can't blend with other properties' monies. There is no way for you to actually pay property B's expenses with property A's money, because that's a sealed pipe with only that property's water in there. All the complication of managing these pipes and plumbing is done behind the scenes, and it looks something like this, where you would have integrated trust environment. We use trust accounts because we feel that they're safer. Trust accounts are really cool to use because they don't form part of your business balances. And as a landlord, what I look for when I go to a property broker is to say, if something happens to you, if you go bankrupt, if you get liquidated, if someone forecloses on you, what happens to my money that's in your account? And that's a very valid question that a landlord can ask. And if I'm just using a business account and saying, pay your rent into my business account, that landlord's funds are at risk. If you are liquidated or sequestrated or asset attachment, there's no way to explain to the bank that the funds in my account don't really belong to me. So as a landlord, that's a piece of security that I ask for. So if you want to have a competitive offering to a landlord, one of the first things that I'd say to a landlord is I use a platform that opens trust accounts to keep money separate from my business, so that if something happens to my business, your funds are still fine. Like number one selling proposition of using something like PayProp that puts money outside of your business. In that, we've got places where the monies get received and paid out into different escrow accounts if you want to keep money. I know it's not a very big thing in Canada to keep security deposits, and then to pay beneficiaries out. But the most important part to remember is for all that money that comes into the main trust, it is kept separately by properties A, B, C, and D, and you can't mix and you can't mingle. So in summary, and I said this would be 15 minutes, it's slightly longer. Landlords are happy landlords when they feel they are your only client. And often people confuse that with CRM and remembering their birthdays and sending them flowers, and that's really cool. But in the great words of Tom Cruise, show me the money. You know, if you can't look after my money, then flowers mean nothing to me. And that's how you show you care as a landlord. And slopping accounting, mixing of funds, diluting income, cross-funding expenses, and other leakages of funds are not a good look. They're not a good look at all. And if you need to spend hours to reconcile back for a landlord to say, oh, wait, I think I remember what I did with your money, that's a landlord that you lose. If you want to go into the market as a competitive player, this is the key promise to make to a landlord, is to say, you know what, the way that I'm going to treat your rental funds is going to be an extension of this expectation that you have that I'm only looking after you. I'm going to treat your funds in a way that they are separated, that they are separate not only from my business funds, but from all other landlord funds, so that I cannot accidentally use your money to pay for other people's expenses, so that I can make sure that you always get what is fully due to you, and that there is no accidental dilution or leakage. And then the last little bit, because I know you've been in here for like 25 minutes, is I'd always tell you the smartest way to do it is with PayProp, because trying to manage that expectation manually with buckets that are either separate accounts or separate key accounts in terms of accounting gets really messy and really hard. So the smarter thing to do is to use someone that is a third party outside of your business, funnels the money in the right way, so that funds can't mix between properties, so that you, without thinking, without effort, and without having to bend over backwards, can assure landlords that you will look after them as if they're your only client and that their property funds are kept safe. Sorry, my light just went off. Are there any questions? Sorry, my light just went off. If I stand still for too long, it goes off. Any questions from anyone? I don't know. You can type questions. The guys will catch them. I'm not seeing anything come up. Oh, there we go on chat. I'm seeing some comments. Thank you for all the comments. I am not seeing any questions. Not seeing any questions. Okay. Anyone have any last questions before we say goodbye to each other? We'll do these. Oh, there's a Q&A coming up. Sorry, a Q&A. Regarding chasing funds quickly in order to keep landlords happy, we are trying to set the expectation of our tenants that they haven't paid on the first day, they receive a light warning on the second. If they haven't paid on the second, they receive a final warning, and they haven't paid by the fourth, they receive an N4. Yes. unless they're explicit and pre-approved rationale, we've come into an issue with tenants on bill payment due to the day or two delay. Yes. So the question is, the tenant, if I understand your question correctly, Hart, is that there's a day or two delay on bill payments often that the tenant says, but I have paid, it just hasn't cleared. It's important to go back to your lease agreement. Good lease agreements say the money should clear on the 1st. So it's about being clear in your legal agreement with the tenant. I don't care how you pay. You can pay me by check with a postal pigeon. If the expectation is that the money must clear by the 1st, I don't care what method you use. It doesn't matter to me. It's not my problem. So I would go back to my lease and see if that's not something worth amending. To go, it's funds cleared by the 1st. And then tenants have different choices how to pay you. I mean, if a tenant's obligation is to pay you by the 1st and it should have cleared by the 1st, a tenant can wire you and that money is available immediately. The tenant's choice of payment method should not affect your decision-making with regards to chasing them. Because it's the old promise of the check is in the mail. Me just telling you that I've paid means absolutely nothing. I would go back to the lease, make sure that the lease says funds need to clear by the 1st. That would be my advice. Yes, thank you, Hart. And again, go back to your lease agreement. If it's not on the lease, you can't enforce it. That's quite important. A lot of times, agents allocate themselves rights from common sense, which should be common sense, but if it's not on the lease agreement, you can't enforce it. So you need to make sure that that sits in your lease agreement and that it's watertight there. Because if you're going to be chasing and issuing N4, people are going to know on the basis of what are you issuing this N4. And if your lease agreement says cleared, it should be cleared. Any other questions? None at the moment. So we'll try to have these webinars once a quarter and pick random topics. If there are any topics that you think are interesting, that you, is there a way to show money taken away for maintenance other than from minusing it from a tenant? Is there a way to show money taken away from maintenance other than from minusing it from a tenant? I think I don't know if you're asking me a PayProp question or a general question, but let me quickly talk about it. So I think what the question means is, if I have spent maintenance expenses on a property, how do I show that? Now, there's two ways to do it. The one is I invoice the tenant because the tenant broke the property, therefore extra money will come in and I need to show that I've spent it. The other one is that it's just wear and tear and it comes from the landlord account, which means I take it off the rent. In PayProp specifically, because PayProp is direct, PayProp specifically. So what happens in PayProp is PayProp's linked to the bank and it accounts for all transactions as they happen in the bank. So we can't deal with theoretical transactions. So if $100 comes in, PayProp's going to show $100 has come in. But if I want to show the owner that I've actually spent money for maintenance, I need to have spent the money on PayProp. I need to have put the transaction through, because we don't do accounting entries. And that's the beauty of PayProp, because I mean, if you think about accounting entries, I can say it was $500, it was $50, it was $7. PayProp records the actual transactions as they happen. So unfortunately, that is the only way to show an expense on PayProp, is to actually make the expense. And that is what makes us unique, in that you don't have to think about the accounting because we do it for you. But the consequence of that is that we can only account for the actual bank transactions that have happened. So if you want to show a maintenance expense, you should pay someone. And now there are a couple of ways to do it. Some people have their own internal maintenance companies. So you can set up a payment to your maintenance company or to your agency if you've paid it out of pocket. So let's just deal with that quickly. If I have taken cash out of my drawer and I've paid the landscaper, what you can do on PayProp is set up a payment to your management company so that when the rent hits, it reimburses you for the money that you've taken out of your pocket. But there's always got to flow money for PayProp to record it. I hope that, Ian, that answered your question. Oh, Shane, great, fantastic. Any other questions? Not at the moment. Lovely. Well, I want to thank you all for being here. I want to thank you for asking questions. I want to thank you for engaging with us. If you've got any PayProp specific queries, please, and you're a PayProp client, you know how to get hold of us. If you're not a PayProp client and you want to know about how we can help you keep that promise to landlords pure around looking after their funds as if they're their only client, get in touch. We are there to help. We're there to make your business safer, and we're there to help you get and keep your landlords. We'd love to help. Otherwise, have a lovely day. Enjoy it up north. And if it makes you feel any better, we've got miserable weather down in Miami as well. So it's not just Canada that's cold today. Have a lovely day. Keep well. Bye.